Welcome back to Finpod, your daily financial digest. I am Evan, and I am glad you are joining me to wrap up the market action. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and top-tier stock recommendations. Let us dive in. The conversation is dominated by a few key names. Intel is seeing a lot of chatter today, with shares sliding around 8%. Investors are pulling back after an initial post-earnings rally, as concerns grow over the company's massive capital expenditure plans and the sustainability of its foundry revenue. Meanwhile, MaxLinear is down sharply, falling over 20%. Despite beating earnings expectations, the stock is suffering from a classic sell-the-news reaction after a strong run-up leading into the report, with investors questioning the sustainability of its data center growth. On the brighter side, Verizon is up about 6% today. The company beat earnings estimates and raised its full-year guidance, while also announcing a significant new fiber connectivity deal with Google to support AI data centers, which has clearly caught the market's attention. Looking at the broader market, it was a mixed day on Wall Street. The S&P 500 barely budged, while the Dow managed a gain of about 0.5%. The Nasdaq, however, dipped more than 0.5%, weighed down by weakness in some major tech names. The big story today was the retreat in oil prices, which fell for the first time in a week, providing a bit of relief to the bond market. However, investors remain on edge as geopolitical tensions in the Middle East continue to threaten global energy flows, and the market is still processing the implications of recent economic data. In the AI economy, the theme remains focused on the massive spending required to build out infrastructure. While giants like Google and NVDA continue to lead the conversation, we are seeing more traditional companies like Verizon pivot toward providing the connectivity backbone for these AI data centers. We also saw the launch of a new AI unemployment tracker in California, highlighting the growing focus on how this technology will reshape the workforce. Investors are becoming increasingly selective, rewarding companies that show a clear path to profitability from their AI investments, while showing less patience for those with ballooning costs and no clear return. Beyond the tech sector, we had some major moves in individual stocks. Tenet Healthcare surged over 17% today, crushing earnings expectations and raising its outlook on the back of strong hospital volume and tight cost control. On the flip side, American Express fell over 4%. Despite an earnings beat, the market was disappointed by the company's decision to maintain its full-year profit forecast, as investors were hoping for more immediate bottom-line benefits from its recent revenue growth. Finally, looking at earnings, it has been a busy day for financial results. Beyond what we have already covered, Schlumberger saw its shares jump by double digits, reflecting a strong performance in its production and digital segments. Booz Allen Hamilton also saw a significant rally of over 10% after reporting strong profitability and disciplined execution, even as it fell slightly short of top-line revenue estimates. That is all for today's episode. We covered the mixed market performance, the massive moves in healthcare and financials, and the ongoing tug-of-war between AI investment spending and profit growth. If you enjoyed this update, please like, share, and subscribe to the channel. Drop a comment if there is a specific stock or sector you want me to cover next week. For stock recommendations, visit Fintwit.ai. Thanks for listening and have a great weekend.